Hello and welcome to Accountancy Insights. I'm Philippa Lamb and this is your monthly roundup of accountancy news. It is a bumper episode today. First up, we have welcome news from the Business Confidence Monitor, plus insight into why 3/4 of councils in England are at least a year behind in publishing audited financial statements, an update on the troubled probate service, and to finish, ICAEW's recommendations on the new government's business tax roadmap. So it's a lot to get through, and this is new, now you can easily skip to any segment you're particularly interested in because we're adding time codes for each one to the show notes for every episode from now on. Joining us today, Iain Wright, Managing Director of Reputation and Influence, Alison Ring, Director of Public Sector and Taxation, Sophie Wales, Director of Regulatory Policy, and Richard Jones, Senior Technical Manager in Tax Policy. Hello, everyone.
Hi there. Hello.
So let's start with those results from the Business Confidence Monitor, Iain. They were published in July, weren't they? What are the headlines?
Business Confidence Monitoring Index has risen. It's risen for the third successive quarter, and it's the highest now since quarter one 2022. I think that overall rise in sentiment and confidence is really largely fueled by the reduction in cost inflation and a sense that although domestic sales are somewhat challenging, that they will get better in subsequent years as we see the increase as inflation fall and we see interest rates fall as well.
Obviously, it's worth remembering this research, it doesn't include the impact of the general election.
Well, yes, I mean, that is correct up to a point. So the actual survey work took place between the middle of April to the 22nd of June. So what's that, 2 or 3 weeks before the general election? And although it's fair to say that we didn't know the results of the general election, I think there was a general sense of the result being probably expected. And maybe that fed into it as well, that after, a decade of some degree of uncertainty, they were expecting an administration with a workable majority that could possibly provide stability in business and economic policy.
And as you say, it's looking positive. How does the sentiment vary, though, across different sectors?
Well, confidence has improved across the board. It's actually highest in services as opposed to, say, manufacturing. So the highest confident sector is banking, finance and insurance. Interestingly, energy, water and mining are the second most confidence sector. And they're at the highest since they've been since quarter four 2021. So since really the darkest days of the pandemic. It's tough in property and it's tough in retail and wholesale again. And again, that's generally, I think, reflecting the point about, people don't have as much money in their pockets as they used to have as a result of inflation and as a result of interest rates. So, in order to get people to the shops spending, that's been difficult, and that's shown in the level of confidence.
How about the regional picture?
That, again, is strong. It's across the board. So there isn't generally a picture in terms of who is more confident as a region than others. It's generally positive. And again, I said, let's not detract from the positive news. There's a sense that, as I said, interest rates could be falling. There's a sense that inflation has reached its peak and will be coming back to around about 2% increase year on year. There are headwinds. There always are. And especially in the last couple of days, actually, we're recording this on a Monday morning when the stock exchanges across the world are falling quite dramatically. The Bank of Japan have just increased interest rates for the first time in 17 years. The US job outlook is looking bleak. So, there are some dark clouds about, but in the main, domestically, there's really strong positive news.
Without wishing to be a naysayer, though, there are going to be anxieties, aren't there? What would you say are the main ones?
I think there's a sense of, if you look at challenges, regulatory challenges are highest. And I do like this question from the Business Confidence Monitor. It's essentially the question, what keeps you awake at night? As business leaders, as finance directors, what are the things that are bothering you? Regulatory changes are high and have been for some time. So it's that general sense of red tape. It's difficult to actually hone in and say, well, what would you like to have changed or removed? There's just that general noise of red tape.
And this is in highly regulated sectors in particular?
It tends to be in those highly regulated sectors, particularly in terms of, finance and insurance, and in terms of water and energy, that sort of thing. Yeah, as you said, they're regulated. But actually, the other interesting thing, and this has been here for a while, is customer demand. Where is my next customer coming from? Now, that's part and parcel, Philippa, of being in business, but it seems to be, over the last few years, particularly challenging. Customers, whether it's business to business or business to consumer, are discerning. They're very price sensitive. They are concerned about how much money have I got in my pocket, and so where do I go in order to land the next win? That is obviously something that's keeping people awake at night.
Thinking about other anxieties, late payments cropped up, hasn't it, as a growing issue, just in some sectors?
Yes, that's true. I mean, that has been bubbling under for quite some time. And again, that's always a sign of weakness. If you think that trading conditions are tight, you won't pay until you possibly have to. You want to keep that cash flow position strong. So, although it's not as strong as it used to be in terms of a challenge that people are facing, late payments does give that indication of not necessarily a return to strong form with the economy. There is a large element of weakness still there.
And what about skills?
I noticed last week when the Bank of England reduced interest rates, they talked about second round trends. First round, Philip, means, how much your prices, and they tend to be imported in. The price of energy from Russia, for example, had a major impact when the war in Ukraine started a couple of years ago. But the second round impact are pay increases. Do I have my salary increased according to inflation? And it's that second round, particularly in terms of pay, that the Bank of England is concerned about, in respect of that is going to keep inflation perhaps stubbornly high over the next 12 months or so. And part of that, although there is a looser labour market, unemployment expected to rise slightly, the ability to get the skills that you need in order to advance your business is becoming tighter. And of course, because of that, there's a premium. You have to pay higher wages in order to attract the talent. And we're seeing a tightening in some sectors, if not most sectors, in terms of where am I going to get my skilled workers from?
The economic backdrop for the research, it's always important to understand what it is. Are there other thoughts there that you have about perhaps what the outlook is now?
I don't think we should lose sight of the fact that business confidence is at a 2-year high, has increased over the last 3 quarters or so. We should be feeling good. Having said that, in terms of where we are, and one of the great strengths of the business confidence monitoring is, this has been going for the best part of 20 years. So you can really plot what did people think in terms of business confidence sentiment over many, many quarters. Business confidence is not as high as it was in the bounce back up after the 2008 global financial crash. Business confidence fell quite sharply in the period 2010 to 2012 and then bounced back into 2013. That was strong. It's not bounced back as strongly as when we emerged out of lockdown. So although it's rising more slowly and not at levels that we've seen in the last 20 years or so. And that said, I think that's a reflection of, there is confidence that interest rates are going to come down and that the rate of inflation will reduce. But there are headwinds there, as I said, in terms of even in the last couple of days. Although the Bank of England reduced interest rates, it made it very clear this is not going to be month-on-month rate reductions. Inflation will stay stubbornly persistent, and therefore interest rates will stay higher for longer. And then overseas, US jobs and manufacturing data, that global concern, sell-off across stock markets around the world, indicates that the whole global economy actually is probably at a crossroads and might be falling into recession. And that is obviously, with us as a strong trading nation, will have a big, big impact.
And the events of the last few years have taught people to be cautious, right? Taught business to be cautious.
Well, it's a bit of a cliche, isn't it? Uncertainty is the certainty. Since arguably the financial crash of 2008, people have had 15 years of absolute uncertainty. So tread carefully, perhaps hedge your bets when it comes to investment because you don't know what's around the corner. And when you think about what people have had, in this country, we've had Brexit, and then we've had a global recession caused by war in Ukraine. and of course the global pandemic, the biggest health and social and then economic input for a century. People are going to be cautious, and because of that, business confidence will be relatively subdued.
The data, it is really fascinating. If people would like to dig into, it and, of course, the latest results, where can they find that?
There's a really good summary on ICAEW's website when you can plot and chop and change into what you're interested in, whether it's a sector or whether it's a region. And you can look back over 20 years of business confidence monitoring data to show where we are now relative to where we were previously. Have a look at icaew.com/BCM.
That's great. Thanks very much indeed, Iain.
Thank you.
Now, Alison, local authority finances. Recent headlines, they don't make easy reading, do they? Nottingham, Birmingham, Woking councils all went bust in 2023. What does the overall picture look like right now?
It's not very healthy, unfortunately. Many councils have had to issue Section 114 notices. So a 114 notice, just to explain, indicates that a council's forecast income is not enough to actually cover its forecast expenditure for the coming year. It's called a bankruptcy sort of notice. And interestingly, the legislation when Section 114 came in was from 1988. And since then, there have been 14 Section 114 notices issued, but there have been 13 in the last 6 years. So it just indicates the level of problems, the level of financial pressure in that sector.
And have they all been issued for the same reasons?
Well, the same reason is obviously because they can't meet their expenditure, but actually the underlying causes are quite different within the different councils. But I would say primarily it's caused by a lack of good governance within the sector.
I mean, it's hard to get clarity here, isn't it? Because so many councils are failing to file audited accounts on time. How big is the backlog?
So I think the forecast at the moment is that by the end of September 2024, there will be a number of 1,000 unpublished audited accounts for councils.
And what proportion of councils does that represent?
Well, I think it's over 3/4 of the councils.
Okay.
So it's a large number. And the other challenge is that they are old accounts as well that haven't been published.
The factors contributing to the challenges, budgets have been squeezed, central government funding, it's fallen, I think it's 40%, isn't it, since 2010. What else has been playing into this?
I think the biggest challenge for councils that they have is that they have to deliver statutory services such as social care, special education needs funding. So they have to provide those services by law. And I would say that probably about 85% of the expenditure has to be statutorily delivered. So that's one of the main causes.
A huge proportion.
Yeah, of the expenses. They've got a lack of investment really in the finance teams within local government. So they don't actually necessarily have the resources to actually prepare the financial statements and deal with the finances. And the other thing I'd say is I think they're suffering from a lack of independent challenge, I suppose, really, on their boards and committees. And that challenge is necessary, I think, for good governance. And so I would actually do a plug here now really for our members to look out for vacancies on their local authority audit committees, for example, and step into those roles, because I think it would do a really good service to the local authority.
Are they having trouble filling them?
I think they have trouble filling their general roles within a council. So, for example, planning officers and legal expertise is very short. So, again, one has to pay a premium, as Iain was just saying, around the skills set. And I think the government has suggested that they need a load of new planning officers, which is fine, to get buildings ongoing, etc. But actually, where are those planning officers going to come from?
So what do the councils have to say? Why do they say they're delaying in filing these accounts?
Well, I think there's many reasons for the delay. If there was one single reason, there'd be one simple solution. It's a combination of many different factors over the last few years. And the point really is that all parts of the system, all the stakeholders really have to pull together to actually get back on track to publish the audited accounts.
And the government is kind of running out of patience. They're taking action.
So we had this consultation in February from the old government around putting in a backstop date. So there basically is a sort of a date by which all councils have to file their accounts. And this was taken up by the new government. And last Tuesday, the government published a statement saying that the outstanding audits for 2022 to 2023 must be published by the 13th of December this year, with ongoing dates for later years. And the idea is that backstop provides sort of, I don't know, like a reset to the system. And you've got that backstop date, you have to publish your accounts, and thereafter they're going to have a recovery plan, really, to get the system back into a better mode.
I mean, it sounds like a good plan, but as you say, we've got 3/4 of councils in this situation. What happens if they fail to meet these backstop dates? Because presumably they are not all going to do that, are they?
No, it's going to be a very interesting situation that will unravel, really. There's no penalty for a council not publishing their accounts or for the auditors not completing their audit by that date. So what we are likely to see is, in order to comply with that backstop date, say, for example, this year of the 13th of December, we're likely to see a number of modified or disclaimed audit opinions. So basically, the auditor is unable to reach a final audit opinion on those accounts, which is not great, but it's essentially the least worst option that we have.
Better than nothing. And presumably the expectation on the part of government is that they're not going to see these filed on time either.
The point now is that we have to work with councillors, with the auditors, so that people become more accustomed, I suppose, really, to the disclaimed audit opinion, so that they know it's not their fault, but it's actually something, as I said, to get back the system, to reset the system, and then we can move on, and hopefully within maybe 2 years the audit opinions will be clean.
What's ICAEW's take on this? Presumably you're pleased the government is taking steps and promising legislation to bring the backstop dates into law.
Yeah, I think the ICAEW view is that it's the least worst option to reset the system. And there's been talk about this for a number of years, how we're going to reset the system, how we're going to recover from the current situation. So I think actually the government taking action to bring in the legislation to bring backstop dates into law is a welcome step, but it's the first step in order to actually recover and reform the system.
What else would you want to see happen?
So I think you need to invest in the finance teams. You need to have non-competitive bidding pots for councils. Central government need to trust local government to get on with things. And we need to have, I think, strengthening the accounts themselves, because as Sir Tony Redmond said in his review, they're impenetrable. And that's not a good look, either to the accounts preparers or to the auditors.
Absolutely. Alison, thanks very much.
Thank you.
On to the probate service with Sophie now. Sophie, before we get into the detail, I am thinking not everyone will know that ICAEW is actually a regulator in this area.
Since 2014, we've been a regulator for probate, and we licence or accredit around 350 firms, which is great because it means they can give a holistic service to their clients across the board.
And it's fair to say there have been issues with the probate registry lately.
Yes, there's been problems with long delays at the probate office for a few years now, but last year it was particularly bad, with people having to wait months, not weeks, for grants of probate. So the timeliness has been poor, but it's also been really unpredictable. And that makes it really difficult for our firms to manage their clients' expectations. And it also causes a great deal of stress and financial worries for families who are bereaved and trying to get a grant of probate.
And it's been taking a very long time, hasn't it, to get calls answered?
Yeah, so I think at the worst last year, you could wait up to an hour to have somebody answer a call to the probate service.
Wow.
And then because it's a call centre setup, you could wait for an hour and then find that the person you ultimately speak to can't really help you with your problem. So a lot of frustration on the part of practitioners and bereaved family members.
Absolutely. Why is this happening? What's going on with the service?
What we think has happened is that because there was a centralisation exercise a few years ago and the closing of regional offices, quite a lot of the really experienced staff left. And that meant there was a loss of corporate knowledge. And although there's been a sort of a computer system put in place, it's not replaced that sort of in-person knowledge and the ability to just go to your local probate office and have a conversation with the staff members.
So they need new staff to be hired. They need robust training for them when they've got them. There's a lack of registrars as well, isn't there?
Yeah, so there's only, I think, the equivalent of 2.5 registrars nationally, and that does cause a bottleneck in the service. We're aware that they are looking to recruit more registrars, but also staff in general. But then there's a lead time in terms of getting those staff trained up and trying to get them to the level of knowledge that's needed.
Now, I know back in April you gave evidence to the Justice Committee about this. What are the ICAEW recommendations on this?
In addition to recruiting and training the staff, we think there should be minimum service level requirements for the probate registry. And we think this should involve setting some realistic processing times for different types of applications, and that those times should be published so that it's clear to people how long they should expect to wait to get the grant of probate. And just from a service level more generally, we think there should be a stated maximum number of working days in which queries are guaranteed to receive at least an acknowledgement. Because what firms were telling us is that they'd put a query in and it would go into a black hole, and you just didn't know whether you would be waiting a few days or weeks to get a response at all. And we also think that there should be more ability for people to have direct communication with people who know about the cases. And if they need to make an appointment to do that, that's fine. But there should be a way that you can contact the person dealing with your application. And then the last thing we talked about was, at the moment, you send the application in and you are not allowed to talk to anyone about that for 16 weeks.
It's such a long time.
It's a really long time, especially if you're a family member who's trying to deal with all these quite difficult situations. So we think there should be a way that you can talk to somebody in the first 16 weeks.
You've got a recommendation around will writing as well, I think, haven't you?
Yeah, so this was an ancillary question that the committee were looking at, was asking about whether will writing should be regulated, because probate is regulated under the Legal Services Act, and you're not allowed to do that unless you're regulated. But anybody can write a will, and our view is that is a bit of an inconsistency, because a will is a really important document, and you would hope that the person writing it knows what they're doing, because our firms tell us that actually if somebody comes to them with a poorly written will, it ends up costing the family more money in the long run, because it causes so many problems and can actually lead to sort of disputes and contentious probate situations.
I mean, talking about costing people money, presumably these delays will have cost people money. They will have caused financial damage. What's to be done about that?
Well, I think there's some things that can be helped and things that can't, but we hear a lot of issues with house sales falling through, or by the time you've waited for the grant of probate, you've not got as much for the house as you would like to have done. That's quite tricky to do anything about. But there are other issues where, for example, you haven't paid the inheritance tax on time, or you're paying it by instalments because you can't get hold of the money that you need in full. And our suggestion was, well, maybe HMRC should postpone the interest on those inheritance tax instalment payments, because it would seem a little unfair that one government department isn't doing the thing they should, and another government department is profiting from that. That just seems wrong to me. So that was one of our suggestions.
Are there any signs of improvement since you gave evidence?
So anecdotally, it would appear that things are improving. Firms are telling us about some actually very quick grants of probate issues. I think there are still inconsistencies, and I think there are perhaps more the complex ones are taking a little longer, but it looks like the tide is turning.
Well, it's encouraging to hear, because I think your colleague, Rachel Clements, she attended a user group meeting, didn't she, back in June? What came out of that?
So we engage with His Majesty's Courts and Tribunal Service on a quarterly basis, and we have that direct dialogue about how it's going. And the most recent one of those meetings, they said they had record outputs, so they issued more grants of probate than they had applications come in. So that's a promising sign. But they did acknowledge that attrition of technical staff remains an issue. They are actively recruiting, but I think it's going to take some time to get in the number of people that they need to. I mean, I think last year they recruited 100 people, but I don't think they all met the grade in terms of the training. So it's an ongoing operation, I think, to keep getting the staff in. And there were some other things that came out of that user group meeting with HMCTS. And one of them was that the Probate Office has been trialling reduced helpline hours, which at first look sounds unhelpful, but actually they're saying what that means is that means people can be working on processing the grants rather than answering the phone. And they say that has lowered the average age of open cases, but that they're also now able to answer calls in an average of 12 minutes and 50 seconds, which is still quite a long time, but it's nowhere near the highs of an hour that we were talking about last year. And then there's another thing that they trialled virtual case surgeries. They didn't give a lot of notice for these, so not many people got to have an appointment, but it meant that actually a load of grants on those cases were issued before the surgery meeting, because the staff member opened the file, had a look, and went, oh, actually, I think I can issue this. So we think it's a really good idea and something they should continue, and we're going to be looking for making sure our firms have the opportunity to attend those virtual case surgeries.
Yeah, that all sounds very positive. I mean, unsurprisingly, I guess there's been no update from the new government on any of this yet. Where can people find out more about it if they need to?
More generally, they can visit our website at icaew.com/probate. We issue regular communications to our probate firms to tell them the latest that we've heard on this. In terms of the new government, we will be looking to engage with the new minister to explain again why we think this is such an important issue and to recommend that the suggestions we made to the Justice Committee are taken forward.
Sounds good, Sophie. Thanks very much.
Thank you.
Now, finally, Richard and business tax. I'm guessing a new government is going to mean it's a particularly busy time for the ICAEW tax team, right?
Yeah, absolutely. A new government brings in a new set of priorities, but also a fabulous opportunity because it's a whole new set of ministers, a whole new set of people to explain our particular priorities and wants to as well. So this is actually a great time for us to be engaging with government.
And the government's committed to publishing a business tax roadmap.
Yes, hopefully we're going to hear more about that in the budget, which is coming up on the 30th of October. So this is our opportunity now for us to engage with the government to put a few things in there that hopefully we'd like to see announced. So it's not a huge amount of time, but that's why we're really pushing forward.
Now, I know you're working on a letter detailing what ICAEW would like to see. 5 key points in the letter as it stands right now?
Yes, there are 5 main areas that we are looking at in terms of business tax.
Should we start with R&D tax relief and capital allowances?
Yes, so these are 2 areas which provide an incentive for investment, particularly for companies. R&D tax relief is an area that has seen a lot of change over probably the last 5-10 years. It's seen a lot of change throughout its life, to be honest, but particularly over the last, let's say, 5 years. And it's something that we'd basically like to see more stability in. It's a problem because companies and their advisors are struggling to understand the rules because they keep changing. You know, what allowances are available, what types of expenditure qualify. So we just like to see some stability around that area.
At least for the life of this Parliament.
Yes, that would be a starting point.
What else?
Well, also, particularly over the last year to 18 months, we've seen a change in the way that HMRC has been processing claims and also inquiring into claims. Now, that's been driven largely by a number of, should we say, less than accurate claims being submitted by a small handful of advisors. And the approach that HMRC has taken to that is really to crack down on all claims, which, whilst it, to some extent, it has an impact on the less accurate ones, it also has an impact on genuine claimants. And we've got a lot of members who are very unhappy about it because they've got clients who, you know, have got very legitimate claims that are either just aren't taking their claims forward because it's just not cost effective for them to do so, to deal with the inquiries that are coming through from HMRC.
So you'd like to see the approach change there?
There are a couple of main things that could change here. One is to take more of a risk-based approach, to look at the parties that are making those claims. And if they're from trusted advisors, people that the HMRC trust, then perhaps they could take a different approach to that. Another thing really would be just to change the way in which the structure of the inspectors are. I mean, largely these claims are being processed by non-specialists, but R&D tax relief is a very complex area, not just in terms of the mechanics of the relief, but also it's based on understanding the science and technology that's being advanced. And so we'd like to see more partnership with industry experts or subject matter experts, maybe not even employed by HMRC, but certainly on hand to be able to advise whether something is science or technology or an advance within the rules. So that, I think, would really, really help to make that processing a lot more effective.
And what's the thinking on capital allowances?
So capital allowances has generally been working pretty well, and we really welcomed the introduction of full expensing that came through in the last government. This essentially provides for full relief for qualifying expenditure, which is largely plant and machinery. But there are some types of expenditure that fall through the gaps. One of them is on leased assets. So this is where a business acquires assets to lease to another party. Now, various governments of various colours have been quite suspicious about providing allowances for this kind of activity, largely because they can see a form of avoidance possibility. And so there have been restrictions in place on providing first-year allowances on that type of activity. The previous government did enter into dialogue with interested parties and was making some really good progress. So we'd really like to see that continued by this new government.
Thinking about other capital allowances, sustainability, would that be a key issue of interest?
Yes, certainly we would like to see the government double down on its net zero promises. And one of the ways it can do that is to incentivise businesses to set up renewable energy projects. Now, that isn't always encouraged through the capital allowances regime as it currently stands, because those sort of projects incur a lot of upfront costs, things like planning, feasibility, land preparation. For example, if you were to install a wind farm, that would require a lot of that kind of expenditure. And it just doesn't qualify because it's capital, so it doesn't qualify as revenue. And it also doesn't qualify for capital allowances. So we'd love for the government to have a review of that to see to what extent it could extend capital allowances to that kind of expenditure.
So moving on, I understand digital services tax is being affected by tax harmonisation internationally. What's happening there?
In 2020, the UK government introduced what's known as the Digital Services Tax in the UK. That's essentially a 2% tax on revenues that are derived from UK users by large businesses that provide either a social media service, search engine, or an online marketplace. So we're looking at the likes of Google, eBay, these kinds of organisations. These are the ones that they really wanted to target because of the fact that when you don't have a bricks and mortar business, and we'll come on to talk about that, I think, later, it's much easier to move your profits around or to locate in a certain area, perhaps with a lower tax rate. And this is what has been happening for decades, but it's really been enhanced by the availability of the internet, I guess, really. So this is the UK jumping early in advance of the OECD introducing a more global solution. And that's something that has been talked about by members of the OECD now for about 10 years. And there has been some movement on that, which is great. But this was the UK jumping early. But, of course, once that solution comes into place, it should replace the digital services tax. So here we've got a bit of uncertainty. The DST is due to be reviewed by the end of 2025. So we'd like to see government setting out a roadmap as to, before then, how it's going to deal with the transition from the introduction of what's known as Pillar 1 to replace DST. Because Pillar 1 is going to affect a much larger range of businesses. It's not just online businesses. So a bit more certainty would be great in that area.
Anywhere else you'd specifically like to see movement here?
Yes, so I referred there to a Pillar 1. There's also a Pillar 2. The kind of headline rate for Pillar 2 is what's known as a global minimum tax rate. That's something that was reported over the course of the life of the negotiations, at least in the financial press. The idea is that larger businesses, so multinational enterprises, need to be paying a minimum effective tax rate of 15% in every jurisdiction in which they do business. And so what that means is, well, who's going to be paying that? It's largely going to be the subsidiaries, the operating subsidiaries that carry on that business. But in some circumstances under the Pillar 2 rules, those subsidiaries fall out. And so otherwise nobody would end up paying it. And so now there's an add-on to that whereby the ultimate parent entity could pay it. And that's an add-on that hasn't yet been implemented into UK tax law. It's due to come in for accounting periods beginning on or after 31 December 2024. So we're nearly there. And so we'd like a little bit more movement on that as well, because whenever a new legislation comes in, you need time to review it, potentially see if it does what it's meant to do. So hopefully we'll get something on that in the budget as well.
Now, the fourth point ICAEW wants to bring forward is this current distinction between employment and self-employment for tax purposes.
Essentially, employment and self-employment are taxed in different ways. The main two differences are, firstly, the national insurance contribution treatment. And then the second one, probably most listeners will be aware that if you have employment income, it comes out of your salary at source through PAYE, whereas if you're self-employed, you generally will pay that through the self-assessment system, which is obviously a slower rate of payment. So those are the two main differences, and that obviously provides an incentive for self-employment, which is there for a good reason, to incentivise people to set up their own business. But it does create a level of arbitrage. And so there are some people who perhaps, when the man on the Clapham omnibus might look at it in the cold light of day, to mix two metaphors, might consider that person to be an employee, but they've set up a company through which to provide their service. So the then Labour government, back in 1999, introduced what's known as IR35 to clamp down on that. But
So these are anti-avoidance rules.
yes, and it's kind of done what it needs to do, but there are still a lot of cases going through the courts on this. And it still comes back to this key question as to, is someone's employed or self-employed? And there aren't any statutory rules on that. It's all based on case law.
So what are the possible solutions here then?
So we've got a couple of main things, and they're both pretty courageous, I'd say, in terms of a government sticking their neck out to do them. The first one would be simply to remove the differences, to tax employment income in the same way as self-employment income, or vice versa. That obviously creates winners and losers. And obviously no government wants to create losers, because that potentially creates non-voters. So that's one option.
It does away with that incentive you were talking about.
Well,
doesn't it,
exactly, as
to be
well.
entrepreneurial and
Yes.
set up your own business.
That difference is there for a reason, and I think it's a good reason. So the second option might be to introduce some kind of statutory employment test. There was something similar introduced about 10 years ago, the statutory residence test for individuals. So that could be a blueprint for that. Obviously, that would also create its own winners and losers, but probably to a lesser degree. So that might be a more palatable solution.
This has been looked at before. The Taylor Review back, I think it was 2017, wasn't it? They made some recommendations around status for employment law purposes. Could that be reversioned, or at least lessons taken from that?
They could certainly take some lessons from it. One of the drivers for that review was the fact that the world of work has changed so much since employment law was introduced, and particularly with the gig economy, a lot of Uber drivers and delivery drivers and all this kind of thing means that the lines between employment and self-employment are getting very blurred. So that's certainly something that they'll need to bear in mind with any kind of new test that comes in.
You would like to see certainty from government on that. The fifth point, it's a big one. ICAEW wants to see the whole business rate system modernised. What is the thinking there? What would you like to see?
Well, business rates has been around, or a form of rates has been around for a very long time. In fact, it dates back to 1601. It's that old. And it's just not fit for purpose now. One of the big problems is it's basically a fixed cost. So if you imagine, broadly speaking, a business that operates from premises is paying half as much of its rental bill on rates. So, that's kind of added to your fixed cost by 50%. And the problem is that rates aren't based on profitability. They're just based on the value of the property that you've occupied. And so if you're making losses, tough, you still have to pay your business rates. So that's causing a lot of issue for a lot of businesses that are suffering right now.
Yeah, it's a clear win for digital businesses, isn't it?
Yes, and that's one of the reasons why the digital service tax was brought in, to level the playing field to some extent. But it never really served that purpose in the end.
We have seen some reform, haven't we, on this in recent years?
Yes, we've had a number of reforms over the last few years. As I said, the rates are based on the value of the property. And so for example, recently we've gone from having 5-yearly valuations to 3-yearly valuations. But still, that means there's a time lag between a change in value and a change in rates. So we'd like to see a lot more use of technology. We now have AI. We have other forms of technology to help the VOA, which is the valuations office, who actually administer this, to change rates at perhaps more of on a real-time basis. That certainly was introduced in the Netherlands, and it seems to work very well. So that could be a good model to follow.
And cheaper, presumably.
Yes, and also just better reflects what's happening out there in the marketplace. Let's say you had a shopping centre and you lose one key retailer like a John Lewis or a Marks and Spencer's, and all of a sudden the value of all the other properties goes down. That's just not reflected straight away. This is a trend of tax law just not keeping up with the reality of the way people do business.
I mean, in fairness, the pace of change has been fast, hasn't it? But as you say,
Yes,
the
very
disparity
true.
is now really big.
Yeah.
There's a lot here, isn't there? But ICAEW, you've already been busy on this, haven't you?
Yes, that's right. So, in fact, Alison took part in a roundtable that was hosted by James Murray, who's the new Exchequer Secretary to the Treasury, who's the main person responsible for taxation in the government. That was with other representative bodies. We've also been submitting key briefings to various ministers, so we've been very busy. And obviously, as I mentioned, we've got the budget coming up, so we're planning to make a written submission. That needs to be in by the 10th of September, so if anyone would like to contribute that, perhaps we could include the relevant email address in the show notes.
Absolutely, and now's the time by the sound of it.
Yeah.
Thanks, Richard. And if tax is your area, you can find out more on the Tax Track podcast. You can find that wherever you get your podcasts. That is it for this month. I told you it was a packed episode. Head to the show notes for more on everything we've covered today. Check back later in the month for the August episode of Behind the Numbers. Remember, these podcasts count towards your CPD. If you listen on the ICAEW website rather than your phone app, you can just click the Add CPD tool for every episode as you listen to it. It could not be simpler. Meantime, if you're finding these podcasts useful, please do rate, review and share this episode. Subscribe to the whole series on whichever podcast app you prefer. Thanks for being with us.